एवरीवन, गुड मॉर्निंग। इग्नू का असाइनमेंट का सेकेंड ईयर का है ये MEC 007 2022-23। अभी जो असाइनमेंट सबमिट होंगे मार्च अप्रैल के बीच में, उसका आंसर नंबर 5 है। ठीक है, देखते हैं क्वेश्चन क्या पूछा गया। डिस्क्राइब द इवोल्यूशन ऑफ इंटरनेशनल मॉनेटरी सिस्टम, एग्जामिन द ट्रेंड्स इन द international monetary and financial system. Answer is the international financial system often include the monetary and exchange rate arrangement in its coverage. The international financial system is defined as a set of global financial markets, global financial institutions, official lenders such as the IMF, and global regulatory arrangement. This set of institutions exists and has developed to facilitate cross-border transactions in financial instruments. The economic theory, the interdependence of the international monetary system stems from the fact that balance of payment are connected together. If one country has a balance of payment surplus, the rest of the world has a balance of payment deficit, and vice versa. If one country has a balance of trade surplus, the rest of the वर्ड हैज़ बैलेंस ऑफ ट्रेड डेफिसिट। यहाँ पे ट्रेड डेफिसिट और ट्रेड सरप्लस की बात हो रही है, यहाँ पे सिर्फ पेमेंट डेफिसिट और पेमेंट सरप्लस की बात हो रही है ऊपर वाले में। ठीक है, कंफ्यूज नहीं होना। इट हैज़ एन इन्फ्लुएंस ऑन द एक्सचेंज रेट सिस्टम इन द वर्ल्ड ऑफ n countries with the currencies there are n-1 independent exchange rate. There would be too many fixed exchange rates. There is one degree of freedom, giving rise to what theorists call the redundancy problem. The role of that extra degree of freedom was to maintain a stable price level, or in the case of the gold standard, to maintain the price of gold. With the rapid expansion of cross-border capital flows, the problem of what is widely known as impossibility trinity came to the fore. As we have seen earlier, it is impossible to achieve simultaneously the goals of a fixed exchange rate at an open capital account and a monetary policy dedicated to domestic economic goals. At this stage, the fixed exchange rate regime in the various countries was dropped as a goal worth pursuing. Before 1971, in the fixed rate regime, the IMF could defend and manage the anchored dollar system of fixed exchange rates. The IMF lost its role as a guardian of the international monetary system since 1971, and especially after 1973. The year the international monetary system moved towards flexible exchange rate, the fund was shifted from its role of ad hoc macroeconomic consultant and debt monitor, with the breaking down of the gold exchange standard, which acted as a price stabilization mechanism through the interdependence of the currency system. There was inflationary pressure witnessed worldwide. Consequently, the articles of agreement of the IMF were amended in 1978 with a focus now on price stabilization, as embedded in the amended article 4. Regarding role of fund, it is amply clear that the international monetary system was being run by industrialized country and not by IMF as envisaged. There have been severe criticism of the role and functioning of the IMF as a global institution playing a developmental role. The credentials of the IMF have been questioned by raising several issues, including if IMF supported programs impose austerity on countries in financial crisis, whether IMF supported programs will facilitate bankers and light. Similarly, one may ask whether programs supported by IMF constrained spending on priority sectors like education and health by imposing fiscal deficit limits. These have been given rise to various unique trends in the international monetary system. These trends fragmented, and there is no one umbrella institution which can be said to be providing an international monetary and financial architecture presently. These trends are ट्रेंड्स क्या हैं? डोमेस्टिक फाइनेंशियल मार्केट deregulation and opening by countries since early 1980s. Internationalization of domestic financial market and institutions. Companies and financial institutions approach international capital market to raise needed funds. Investors seeking investment opportunity abroad. Countries allow foreign cooperation and financial institutions to issue bonds and stocks dominated in different currencies in the domestic financial markets, and also allow foreign investors to buy their domestic securities. Emergence of other international financial centers located in Europe and Asia, along with the US bond and stock market, the traditional international capital market, growth of offshore money and capital markets such as the market for Eurobond, etc. Integrated stock market, rapid globalization of banking, insurance, and other intermediation businesses. Large banks from the US, Europe, Japan, etc. have global network of branches and subsidiaries. Thus, the international capital market is not a single market. Instead, it refers to a group of offshore and onshore capital markets that are closely interconnected to one another, and in which domestic and foreign residents buy and sell many different types of financial instruments. Uh, Answer khatam. So thanks for watching and writing from over here.